Good day, all. Ira Epstein of Linn Associates with your agriculture update, and this is for the close of business on Tuesday, the 21st of May, 2019. Well, you can see the beans fell very hard, almost a 30-cent range today. I'll explain why in a moment. Wheat gave up all the gains, back down 14, and the corn, well, little lower than mid-session. What the government did is they floated what the farm aid program of the $15 billion that the president's proposing might go to. And they're talking $2 a bushel in soybeans, about 63 cents in wheat, and about 4 cents in corn. So at this time when we don't have a market for our soybeans, and that's the reality, I mean, we have monstrous supply. If you give the farmers more incentive to plant more, what's that going to do to prices? And that's what I think weighed on the market today. Remember, you got a cattle on feed report coming up, and we got monstrous amounts of cattle that are on feed, and talk is more going on there because of cheap grain. In the stock market, a bit of a rally today as the president backtracked on Huawei and allowed the company to still service for a while, maybe to August 19th, existing networks and mobile phones. But as for giving product to build new networks and phones, flat no. Dollar a little bit higher, metals on the whole weaker for the day. So as we take a look at soybeans, you can see you've had a bounce from the 797 area. You're still up overall about 25 cents off that low. Obviously, today's action the market did not like. That's called a big outside day down. And when you put the swing line on, you're back into a downtrend. You have lower highs, lower lows. Until today's high is taken out of what was that? The high was 846.5. This market's back into the selling pressure game. If you take a look at the 18-day average of closes, just go to yesterday's tape. We were talking about it. That's the battleground. And the market was unable to clear a previous high. I think the bears now grabbed control again, and I'd be surprised if they don't try to wrestle that control at that 18-day average. Should the market fall, one of the potential targets could be the lower Bollinger Band. If you recall, this market fell hard, bounced up to the 18-day average, and it's hanging there. Even if today's high is taken out, because we took out the lows of 2 days ago, you could not turn the swing line up. So bears bias down, trend down, and if you look at momentum, it stopped pointing to the upside. It's sort of fallen now into the sideways action. When we go to the meal market, same type of action. Outside day down, which means lower highs, lower lows. If I take off today's action, you can see how this market's been playing at the 18-day average, and today's sort of did it in. So will the sellers come out at the 18-day average is a question. Momentum flat, bias down, trend down. Soybean oil, join the parade, baby. Lower highs, lower lows. Market hasn't yet turned the momentum flat. It is still, it's arcing that way, but not quite there. But the trend is down. So until today's highs in oil, meal, and beans are taken out, the bears wrestled control of the market back. In the corn market, you've had this monstrous vertical rally going from 343 up to today's high of 399. Now, there's nothing magic about the $4 mark other than it's an even money mark. Is that enough to get the farmers to be selling and hedging their crop and maybe buying crop insurance, buying calls against those positions? I'm of the camp that that's what is possibly happening here. I look at 4 days in a row up and over the upper Bollinger Band. You're stretched out. I give the market about a % chance tomorrow of staying over that number. Doesn't mean it's bearish. It simply means I think you're going to move to the right-hand side. In the wheat market, resistance is showing up right here at the 18-day average of, the 100-day average of closes, the green number. You got to that number yesterday. You were over the upper Bollinger Band. You got to it again, and today you settled back, closing 478 3/4, just over the upper Bollinger Band. So you got 1, 2, 3 days in a row, I believe, that you're over it. On this day, we finished out at 467, which was also over that number. So we're in that category where this market, like corn, is stretched out. It's starting to see some resistance. It never has embedded. If it starts turning down here, you can get a bit more of a correction. Sugar market. Let's take a look at what we talked about. Would this market, with the embedded reading, be able to make it back down to the Bollinger Band? The trend, lower highs, lower lows. Gets down to that number today, gets through it by 2 ticks, explodes back to the upside, ending a lot of things. Number one, the pattern is broken of lower highs, lower lows. Number two, you lost the embedded reading. That puts into play price and the possibility of price trying to get back to that 18-day average to figure out what to do from there. The coffee market, a strong, strong performance day. Now, each time you've tried to play the long side for the longest period of time, I can go back, it's off the chart, so it goes back to the beginning of the year, this market has failed to reward the bulls. Is this the time that it will? Until today's low is taken out, you've turned the pattern of up to higher lows, higher highs. You've put into play the upper Bollinger Band, which hasn't been hit since February. That would be a sign that this market may have worn out its stay to the downside. Momentum up and not overbought, bias up. In the cocoa market, if you'll take a look at yesterday, you had that big reversal. It puts into play the possibility that you're going to get to that Bollinger Band. Trend up, higher lows, higher highs. You went through that band a little bit. Will you stay over? It's the question. Wouldn't be surprised to see it pull back. But you're out of your downtrend and the market's defining, at least for the moment. It is in an uptrend. You have 2 layers of support, the 18-day average and the 100 on the way back down. In the cotton market, you lost the embedded reading. Now, you lost that reading really yesterday, and you kept it lost today. The question is, can price and the 18-day average make a run at each other? What bothers me is they're so far apart, 400 points. Normally, they're closer than that if that rule's going to take hold. I don't doubt my rule. So until the market takes out the most recent low, I say that it's trying to set in place a further gain. Is the trend up? Not really. While the swing line is up, you're under the 18-day average, so the bias is down. The most important part to me is you lost the embedded reading, which means you're oversold down here and could rally over time a bit more. In the cattle market, the bears made their play today. What they did is they held the market against the 18-day average. The market, if it had gotten over this 109.77.5 level, it could have turned the trend up. Instead of doing that, it kept the trend down. Now, until today's high is taken out, you've got lower highs, lower lows. There's a but here. The but is, you notice this 27 reading on the stochastic, it means you're very oversold. So be very, very cautious. Markets to get new sell signals in oversold territory when you have divergence. It's still oversold, but momentum's pointing up. Don't know what to do. We have a big cattle on feed report coming out shortly. Maybe that's what the market's doing, setting itself up for it. In the meantime, feeder cattle issued again. Lower highs, lower lows. The trend is back down. You'd have to take out 146.05 to break that. And like the fat cattle, you can see that the market is still in an oversold territory. And in the hog market, how many days are we going to have this battle right against the 18-day average? We're there. You keep failing. You get up over it. You pull back. It's not following through one way or the other. So it's something I always look at. You know, one of the things I do is I offer a lot of research to you, to my paid subscribers and other people, customers, obviously. And how I started off is in the morning, I start off with a video. I record 40 futures charts with 5 ETFs, and I'm able in that, unlike here, instead of talking generalities, buy here, sell there, do this, I couple that with twice daily written updates. Now, it's a lot of commentary, and the commentary is not book-like. I'm not interested in writing a 6-page market letter. I want to write and give you an idea what I see happening in the market, what I think you pay attention to now, what's moving the market, and for tomorrow or the next part of the current day situation, because I write one at 11:30 in the morning, what I think is at hand, how to handle it. I also put in there written trade recommendations, not as many as I put in my video in the morning, because that's meant for the more aggressive in and out trader. How do you get to see this, to see what I'm talking about? Well, you can call my staff, that's the best way, but you can go to our website, sign up for it there, it's free. Give yourself a trial with it if you haven't had one before. Click up here if you'd like. That'll take you to that page as well, and from there, just sign up for that and anything else you like. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.